Hey guys, welcome back. I hope you had a really great day trading today. So today was Tuesday, November 12th, and today was a really fun day. We had a lot of great swings across the board, a lot of beautiful technical bounces in all the right places. And tomorrow we do have PPI in the morning, 8:30 a.m. The inflation report comes out, and we also have FOMC minutes at 2 p.m. And today we did open flat in SPY and we took it all the way down to the bottom of the implied move. 595 was the bottom of the implied move, and we took it just a little bit below that before coming back up above the 35 EMA, and we settled right on top of the 35 EMA. We are still underneath the signal line down here on Stupid Willie, and SPX, same thing over here. We opened flat and then we dropped down to the bottom of the implied move underneath the 35 EMA, and look at that, perfectly almost to the penny. We bounced right on 59.65. Today on StockTwits, I did post this trade where I did take bull put spreads at 59.65. 59.55, and those did close up 100% when we bounced back up above the 35 EMA right at the bottom of the implied move. We are still underneath the signal line down here, so bearish until we do cross back up, and SPY did close down 0.31%, SPX closed down 0.29%, VIX closed down 1.74%, so VIX is back down in the 14s, and we did close within the implied move both in SPY and SPX. So perfect trading day all the way down to the bottom of the implied move and then back in to close within the implied move. And we saw very similar price action over here in QQQ. We did open flat today, then dropped it all the way to the bottom of the implied move. Look at that, 510 was the bottom of the implied move. The low of the day was right at 510, and we swung back up above the 35 EMA to close within the implied move. QQQ down 0.18%. VXN down 1.36%, so down to 18 for volatility for the Nasdaq, and we did close within the implied move here today. So we did drop underneath the 35 EMA, and we did get pulled back up. All right, IWM, what happened in IWM? We opened with a small gap down, popped up to fill it, and we dropped down to the bottom of the implied move. We did fill this gap from yesterday. We dropped underneath the 35 EMA, took it all the way down to the 30-day average volatility. So bottom of the implied move basically lined right up with the bottom of this gap. We got there, but then we did push a little bit lower. So today, if you did sell 238, 237 bull put spreads, this would have been pretty much a break even. You wouldn't have made money, you wouldn't have lost money. And that's not entirely true. If you took those spreads from up here, then you lost money when we closed outside of the implied move. But if you leaned into this premium and went in at a 1-to-1 ratio down here, then that would have been basically a break even. So IWM closed down 1.75%. Biggest loser of the day. IWM has been seeing the biggest swings, so that is not a surprise. And RVX, the Russell Volatility Index, up 0.66%. And we did not close within the implied move today. We did close within the implied move for tomorrow's contract. So if you did lean into that next day strike, if you did sell 237, 236 bull put spreads, those actually would have closed up 100% for you. All right, and lastly, DIA. We did open DIA flat today, a little bit up, but we got pulled down right away underneath the 35 EMA. We did close this gap from Monday, got pulled underneath the 35 EMA and right here into the red of the week. So week started right here, and we are now trading on the red side of the week. 35 EMA right here acted as resistance when we tried to pop back up, and we got hit by it and got right underneath, and we did close red on the day and on the week so far. So DIA down 0.82%, and yesterday I did mention that when this 35 EMA comes up A lot of times it's underneath the implied move or in the implied move, and when that happens, it tends to act as a support. But we pulled all the way up into the green, and the last few times that I have seen this, I have pointed it out. If you've been around for a little while and watching my videos, then you know that I mentioned that this could be one of those signals that are an exhaustion signal. You could see right here, this wasn't enough. We still pushed higher after this, but once that 35 EMA got into this green, we finally pulled back down. So I'm gonna keep tracking that. I'm gonna keep telling you guys when I see that. It's a really unique signal that I think has a lot of promise going forward and could really give us an edge on finding those down days. So DIA did close down 0.82%. I'm pretty sure I said that already. And we did close within the implied move on the day. And we're still within the implied move for the week for today. For this week, I mean. And tomorrow we have the CPI report in the morning. Let's just head right on over and check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. If you have any questions at all, please leave me a comment below. And if you want to help support the growth of my channel, I have plans for so much new content once I get to the point to where I can make this a full-time thing. And by using that thank you button, that brings me a little bit closer each day to being able to bring you guys more content. And by that, I mean live trading sessions, I mean analysis for other stocks, stock picks for dividends, and so much more. So consider using that thank you button if you think that I earned it. All right, so starting in SPY, tomorrow's implied move is between 592 and 601, and that is from options. The 30-day average volatility is a few dollars wider in each direction, 590 to 604. And the implied move on Thursday's contract is 591 and 603. And tomorrow, Wednesday, we do have CPI. Thursday, we do have PPI. So keep that in mind. And to the upside, the first level to look for is going to be where we have all-time highs. That is at 617 cents. And that is just underneath the top of the implied move, which is 601. 603 is the top of the implied move on Thursday's contract, and then we are right on top of the 35 EMA. So I'm not going to say that's to the downside or to the upside. It's right in the middle, and that should definitely be the first level that we see. And right now you can see that futures are down quite a bit, so this 35 EMA could be to the upside. And today we did see a little bounce on that level, but we are with futures underneath it right now, so that could be a resistance. And if we do see that as a resistance, then 592 is the bottom of the implied move for tomorrow's contract, 591 on Thursday's contract, and underneath that, the next level is going to be the top of this gap, which is the top of the election gap right here. And that is down at 586. So not a difficult trading range for tomorrow. Just remember that CPI is going to affect which way momentum takes us. And from there, it's just about knowing what levels are in our trading range. So then SPX, the implied move for tomorrow over here is between 59.40 and 60.25, and that is from options. The 30-day average volatility is a little bit wider, 59.20 to 60.50, and Thursday's contract, 59.30 to 60.40. To the upside, we do have all-time highs right here. That is at 6,017 and 31 cents. And just above that, we have 60.25. That is the top of the implied move. 60.40 at the top of the implied move on Thursday's contract. If we do find ourselves up here towards the top of the implied move, then I'm going to be looking at 60.40, 60.50 bear call spreads to hopefully get a close within the implied move. And then to the downside, and actually right in the middle, 35 EMA. And we did close right on top of it, actually just a little bit below. And if we open tomorrow and that is a resistance, and you could see ES futures are down 0.21%, I don't really like to look at futures this early. And with CPI in pre-market at 8:30 Eastern time, this doesn't really matter because the momentum is going to be set by what inflation data comes in at. So just know that 35 EMA is right in the middle. And if we do open underneath it, it could be a possible resistance. And if it is a resistance, then 59.40 is the bottom of the implied move, and 59.30 on Thursday's contract. And if we do drop tomorrow, we have this up gap right here. The bottom of that gap is right around 59.25. So that does give a few different strikes to look for. I would likely look at 59.30, 59.20 bull put spreads if we do drop. If we find ourselves anywhere in this gap, I'm going to be looking to these spreads just outside of the implied move. And underneath all of that, we have that 30-minute 200 moving average coming up. And then we do have the top of that up gap from right after election. So again, not a very difficult trading range over here. We are near all-time highs. We don't have a ton of moving averages running through the trading range. So really it's just about knowing where this stuff is and being able to react when we do come up to any of these levels. And then QQQ, the implied move over here, is between 508 and 518, and that is from options. 30-day average volatility is between 506 and 520, so $2 wider in each direction. And the implied move on Thursday's contract for PPI is 507 to 519. And to the upside, the first level to look for is going to be all-time highs right here. That is at 515.58, and that is just under the top of the implied move, which is 518 and 519 on Thursday's contract. And in QQQ, I feel like I would be pretty comfortable with 518, 519 bear call spreads if we do reach the top of the implied move. Those seem pretty reasonable to me, but if we do get a huge push up, then maybe 519, 520 would be a better option. But I think 518, 519 does look pretty good for tomorrow, especially with the momentum here. But remember, a lot of it's going to depend on CPI tomorrow. And then we have 35 EMA right here. We did drop underneath it today and then come right back up. The bottom of the implied move was right here today, and it bounced just right back up above the 35 EMA. But futures right now are down 0.31%, so that would already take us underneath it. And if we come up, it could be a resistance, and in that case, look to 508 is the bottom of the implied move on tomorrow's contract, and 507 on Thursday's. And the bottom of this up gap here from last week on Thursday, that is at 505. The bottom of up gaps do tend to be support if we do come in and retest this level. So 505, in my opinion, would be max pain tomorrow if we do drop. And if we do find ourselves down here, that would be a good place to maybe go long on the day. And then IWM, the implied move over here for tomorrow between 233 and 242, and that is from options. $1 wider in each direction for the 30-day average volatility, so 232 to 243, and on Thursday's contract 232 to 243. And to the upside, we have the 35 EMA. So over here, we did break that today, and we saw that level as resistance. And I don't have futures for small caps up on my screen right here, but I am looking at my phone and they are down 0.45%. So it is likely this 35 EMA is going to be a resistance at open, but if we do get above it, the top of the implied move is at 242. And then right above that is where we did make those recent highs, right around 243, and then we are just underneath all-time highs right here. Momentum is currently down in IWM, and then if we do see that follow through and a resistance at the 35 EMA, then look down to 233. That is the bottom of the implied move. For tomorrow's contract, we could even see a little bit of support right here. You could see that we have been building a little bit of something. I'm going to call that 236, but underneath that 233, and then 232 on Thursday's contract. And then this right here is the election gap, and that is a big one. We do have the 30-minute 200 moving average, so if we do drop into it, that would be an excellent target. And that pretty much wraps up IWM. And then DIA. Lastly, we have the Dow, and we did see this 35 EMA as resistance today. It is going to be our first level, but the implied move for tomorrow is between 434 and 444. That is from options, and then the implied move on the week is between 434, which lines right up with that, and 447, which is a little bit wider. So to the upside, 35 EMA, we did see that as resistance today right here. Momentum is down on Stupid Willie, so a lot of times when the momentum is down, that does correspond with a 35 EMA resistance. But if we do get above that, and that would really need a pretty strong push right here to get above the signal line. But if we do get above that 35 EMA, then the top of the implied move is 444, all-time highs just above that at 444.87, and then the top of the implied move on the week is 447 right here. And to the downside, 434 is the bottom of the implied move for tomorrow. And 434 is also the bottom of the implied move on the week. Underneath all of that, if we do get a really awful inflation report and we find ourselves in this election gap right here, we do have a few things going on. We've got that 30-minute 200 moving average and the 1 hour 200 moving average. So those would probably be a little bit of a support right there. And then we have this down gap and then the election up gap. So that would truly be a target to look for. Bottom of the down gap here is at 427, top is at 429, so that would be where I would be looking if we do start trailing down. So there you have it, guys, everything you need for tomorrow. Have fun, trade safe, make sure you take profits when you're up, and I will see you guys tomorrow night.